Hello, my dear CA intermediate students. Welcome to the last minute revision session. And I heard that law paper was very easy. So, hope my voice is audible first of all to everyone. Yes, good evening, good evening. Is my voice audible? Okay, fine. So, what we are going to see now is about the revision session, like in the plan. So last minute revision plan is what we are going to discuss now. So you can see in the screen. So today, that is 5th May, what we are going to do is that 8 p.m. to 10 p.m. we are going to do the concept grills on GST. So this will help us for revising the entire GST subject. Okay. So that the question and answer, because I know that this time your productivity will be very less, because today only you completed law paper, so you will be little bit, so energy will be down. So therefore, due to that reason, just 2 hours you do the quick revision of concept grills, and then amendments in GST. So somewhere like 10 to, so up to 10 o'clock we will do the concept grills, and then 10 to 11 o'clock you do amendments. Just go through the amendments which is already there in the YouTube channel. Just revise it and you can go to bed for today. And tomorrow morning 6 a.m. to 6 p.m. you focus on income tax. In income tax, so effectively 10 hours you will be getting, and then 6 p.m. to 12 a.m. you focus on GST. Effectively you will get 5 hours. Okay. And here again what you need to do is that from morning 6 o'clock to evening 6 tomorrow, DT you need to focus. So DT, category A, category B and category C topics. So what are those category A, B, C topics? You can see here in DT. This is prepared by Pratik Badani sir. So I requested him to share for our students. So these are the topics, category A topics. First priority. So tax rates, old regime, new regime, special tax rates, residential status, salary, PGBP, capital gains, IFOS, set off and carry forward, deductions, TDS, return of income, and one total income computation question. This is category A. This category A, you need to spend so approximately 5 hours, 6 a.m. to 11 a.m. And then category B topics. So what are category B topics? So this other second priority, basic concepts, again residential status, salary, house property, PGPP, remaining sections, then IFOS, clubbing and TDS, advanced tax and interest calculation. And this you spend around some 4.5 hours. And category C topics are the remaining topics. So 6 a.m. to 6 p.m. And here your focus should be on amendments, because as I already told you, May 25 exam will be more focused on amendments. And you can revise. Suppose in these any chapters, if you wanted to watch any video, you can watch from Pratik Badani sir's channel, YouTube channel, and there you will be able to find the revision videos for direct tax. Okay. So again, I'm telling today for the next 2 hours, concept drills, then amendments. Tomorrow 6 to 6 DT, category ABC topics already. It is there in the Telegram channel and all. I have shared this PDF. Then evening 6:30 p.m. to 12, you need to focus on indirect tax. In indirect tax, exemptions, RCM, input tax credit, place of supply and value of supply. Those things you focus. If really required, you watch revision videos. Otherwise, you prepare from the revised book, whatever you are having. And then next 2 hours you spend on the remaining topics to the extent possible. Thereafter, next day, that is day after tomorrow, exam day. Exam day, what you need to do is that morning you get up 6 o'clock to 7:30, 1.5 hour, MAY'25 50 questions you complete. So quickly go through the MAY'25 50 questions. Okay. Don't watch video and all, because already you have watched video. If really you have not watched, you watch it in some 1.5 or 1.8x speed. Otherwise, if you have the PDF, just go through that. Then the leftover topics in GST. Suppose if you have not completed any topics before day, that is tomorrow, the remaining topics you can complete in GST. So for 2 hours, then last 2 hours, that is 10 to 12. So quick revision of your RTP and MTP. So both DT and IDT. Okay. So that will be sufficient. So this is your simple revision plan. So don't complicate. This is what you can do at this point of time. So you please focus on that and relax yourself. 12 o'clock, you go to the exam hall. Don't discuss anything with anyone. whether you completed this portion, that portion, etc. Don't discuss. Even you don't have to, like read anything new. Just go, breathe in, breathe out, sit relaxed, calm one place, and go to the exam hall. Kindly don't discuss anything. Just shut your mouth. Don't watch your mobile, etc., etc. Just be at peace. Relax yourself. Definitely will be able to do wonders. So because the most successful people are those who revise it best before the day of exam, because this before the day of exam revision will help to a greater extent. How much ever you have studied, you might have forgotten. So therefore, this particular time you need to focus on revision. If you are following this plan, definitely trust me, you're going to write good. And of course, while doing this preparation, don't forget amendments. Okay, amendments are crucial, very, very important. Okay, and then so we will do a quick recap of concept grills so that in MCQs and some small application based questions, this will help you. Okay, for that reason, because the concept is also getting revised here. That is the objective. Already this concept grills PDF will be there available with you. So just you can take that and you can see it. Okay, and even this I will share with you the answers, whatever I have written, that also I will share with you. Don't worry, just focus on this. And anywhere concept and all, if you are not able to recollect, don't worry, anyhow tomorrow you are going to revise, so this will be useful. This is like overall concept discussion is what we are going to aim at now. Got it? First, so this is on supply chapter. A business owner gives laptops used in his business to his friend without any consideration. So without any consideration means we need to refer 71C. There are 4 activities in 71C. What are they? DRIP. So disposal of business asset on which ITC is availed, and related party transactions including transaction between distinct persons. So import of services from related person or another establishment located outside India. P for principal agent transaction, only 4. The moment when you see without consideration, you need to refer 71C. So is it a business asset? Yes, it's a business asset. On which ITC is availed, ITC was also availed. So due to that reason, it will become supply under 71C. Simple, that's it. Okay, and next. A company located in India receives consultancy services from its parent company based in UK, no consideration. So first you check no consideration, means again 71C. This is what? Import of services. Import of services from where? From its parent company, means related person. Import of service from a related person without consideration. But very, very important that it should be in the course or furtherance of business. Yes, company is importing services, so in the course or furtherance of business. So again it will become supply. Then A Limited has a factory in Mumbai and a warehouse in Delhi. Both are registered separately. Both are registered separately means what? They are distinct persons. Who are distinct persons? 2 people are called as distinct person. One registration of a person to their another registration, or one registered establishment of a person in this state and another registered establishment in another state, or even unregistered establishment in another state is also distinct person. Okay, so here both are registered, so both are distinct person. Okay, and so there's no video for conceptual, that's why I'm doing it now. So we will focus. I'm also there. I'm also doing along with you. 10 o'clock. Up to 10 o'clock, I will be with you. So we will complete it. So I know that you will not be able to read anything, open book and read and all. So that's the reason why I'm doing along with you. So that you just listen. This time anyhow, you feel like sleepy and you will sleep. Just casually listen. And so that some concept is going in your brain. Okay. So focus on that. And next. So Mumbai and Delhi are treated as distinct persons. So when they are treated as distinct persons, any transaction between distinct persons will become supply under 71C, even though without consideration. Again, it is without charging any amount, means there is no consideration. So it will become supply under 71C. Next, just remember DRIP, D-R-I-P. These 4 activities are treated as supply, even though without consideration. Mostly they will be focusing on these 4 activities. And one more important point, whenever there are these 4 activities treated as supply without consideration, then how to determine the value? So we need to determine the value as per rules. Usually open market value will be taken. So once it becomes supply under 71C, transaction value not applicable, we need to determine the value as per rules. It is market value. In question, they will give fair market value or open market value. Go by that. Be careful. Okay. Then 4th one, XYZ Limited receives a cash subsidy from state government. So generally subsidy from state government or central government is not treated as consideration. Okay, that point you know. Then a car dealer exchanges a new car for a piece of land owned by a real estate developer with no monetary consideration involved. How will this transaction be treated? So definitely consideration need not be monetary, it can be non-monetary also. So I am giving a car, you are giving me land, so that land will be non-monetary consideration. Same way, you are selling land for which I am giving you car, that car is a non-monetary consideration. So consideration can be monetary or non-monetary. As there is consideration, so it will become supply under 7(1)(a). A software company temporarily transfers the right to use proprietary software to another company for a period of 1 year for a fee. Is this transaction treated as supply of goods or services? So definitely always software. The moment you see software, services, first it is supply. The moment you see software, don't see anything else. It will be supply of service. Okay, whether it is permanent transfer or temporary transfer, software is always treated as supply of service. A commercial complex owner provides renting of space and maintenance service, including electricity supply to a tenant. The rent is 1 lakh per month and maintenance charge is 20,000. Usually rent and maintenance are naturally bundled. So composite supply, when it is composite supply, three conditions you remember. All are naturally bundled, all are taxable, and there should be principal supply. Principal supply means predominant element in the transaction. Then it will be called as composite supply. When it is composite supply, we'll take the rate of principal supply and apply it on the entire transaction. Out of these three, any one condition not satisfied, then it will be coming under mixed supply. Okay. Then that too for a single price. So here 1 lakh and 20,000 will become composite supply, and including 10,000 for electricity. Electricity charges billed separately. When it is billed separately, it will not be coming under composite supply. So that is a separate transaction. Okay. Next, and electricity taxable or exempted. Electricity supplied by electricity distribution utility or transmission utility is exempted. Okay. Remember this. Transmission and distribution of electricity by electricity transmission or distribution utility, along with it ancillary services, that is exempted. Next, a multiplex offers a package deal where a movie ticket and a meal combo are sold together for 500 rupees. A movie ticket is 400, meal combo is priced at 150, sold separately. So basically it will not come under, sold separately. Determine the GST rate applicable to the entire package. So basically this is sold as a combo, means both are taxable, 400 and 150, naturally bundled because they are giving it always, that meal, complimentary. So naturally bundled, the principal supply is movie ticket. So therefore it will become composite supply, and movie ticket is the principal supply and it is taxable accordingly. A holding company transfers 20% of its shares in a subsidiary company to another unrelated entity. So discuss whether transfer of shares is subject to GST. Even though it is related or unrelated, etc. and all, transaction in securities is neither goods nor services. So that's the reason why it will not come under supply. Okay. Next, XYZ, a holding company, provides management consulting service to its subsidiary. So holding and subsidiary are related. Determine whether this transaction is taxable under GST and discuss any related implications. No doubt it's a related party transaction, holding and subsidiary related. So it will become supply under 7(1)(c), even though without consideration. Then a retailer sells a gift hamper consisting of chocolate, soft drink, mobile phone. Basically, chocolate, soft drink and mobile phone, we will not see it as naturally bundled. They are unnatural because they are just giving it as a combo. So due to that reason, it will not come under naturally bundled. And is it for a single price? Yes. So that's why it will come under mixed supply, taxable at highest rate. A business provides packaged service that includes both laptop and mandatory installation. Again, they've used the word mandatory, means it is naturally bundled. How should this transaction be classified under GST and what is the tax rate? Naturally bundled, all are taxable. Principal supply is what? Laptop. So due to that reason, it will be coming under composite supply. Then, a business located in India export goods to its subsidiary in Singapore, and the goods never enter the Indian territory, directly delivered to Singapore. So we have one exclusion from supply. What are the exclusion from supply? Spalled slow. Yes, for sovereign functions, that is municipality or gram panchayat functions. P for post, that is government post, nominated post, like constitutional post. And A for actionable claims other than specified actionable claims. What are specified actionable claims? HC blog. H for horse racing, C for casinos, B for betting, L for lottery, O for online money gaming, and G for gambling. So SPA, L for legal fees, fee collected by court or tribunal. Another L, land sale including sale of building where entire consideration is received after obtaining completion certificate of first occupation, whichever is earlier. E, employee to employer in the course of employment. Okay. D, death related. And then slow, SLOW, S for high seas, sale on high seas. That is sale before import is known as sale on high seas. Then L for liquor license granted by state government. O for outside the country movement of goods. W is warehoused goods under customs sold. So in that outside the country movement of goods, goods originates in Singapore and terminates outside India. So due to that reason, it is excluded from supply. Then an employer gives gifts worth rupees 30,000 to an employee. Employer to employee. What is the value of the gift? It should not exceed 50,000. If the value of gift does not exceed 50,000, it is not a supply per annum per employee. Then a company sells a machine with an accompanying 2-year warranty service as a part of sale contract. Is this transaction treated as composite supply or mixed supply? Basically, standard warranty. So they are giving a standard warranty. Machine and warranty is naturally bundled because by default they give now. So it will be coming under composite supply, and we will take the rate of principal supply, that is machine. A company enters into an agreement to lease a commercial building for a period of 5 years. Leasing of immobile property supply. Yes. So it is transfer of right to use immobile property. It is supply, and it comes under supply of service. Then a company purchases goods worth 6 lakhs and avails ITC. Later it decides to supply the goods to related party at a nominal value of 1,000. Will the transaction be considered as supply? Yes, it is considered as supply because it's a related party transaction, 71C. Even though, and basically 1,000 rupees. So means there is a consideration. So whenever there is a consideration, what I told you, 71A. Okay. And in this case only, I am telling you, don't take this 1,000 as the value. We need to determine the market value. That will be given in the question. So you go by the market value. Then a textile manufacturer sends raw material worth 5 lakhs to a job worker for processing. The job worker does not return the processed goods within 1 year. How will this situation be treated under GST? Okay. So first of all, whenever the goods are sent on job work, it is not a supply. Why it is not a supply? Because it is not permanent transfer disposal of business asset. It's not related party transaction. It's not principal agent transaction. That's why it is not a supply. But the job work they do, the processing work, that will become supply of service. Then ABC Limited and XYZ Limited form a joint venture to develop a real estate project. ABC Limited supplied construction materials to the joint venture without charging any consideration. So basically, members of joint venture and joint venture are not related. Okay. So we don't have any such relationship. Therefore, the said activity is not a supply. What about the members of a joint venture? Members of a joint venture will come under, 71AA. So between a person other than individual and its members. So there it will come. But here there is no consideration. Why won't it come under 71AA? Because there is no consideration. For 71AA, there should be consideration. A retail store offers a promotion where customers give a free mobile cover worth 500 on purchase of a mobile phone worth 20,000. How should this transaction be classified under GST and what is the tax treatment? So all promotional offers, remember, all promotional offers will come under mixed supply. All promotional offers, like buy one get one free, buy this you will get another product free. All promotional offers will come under mixed supply. Okay, and when it is mixed supply, it will be taxable at the highest rate. Okay, so this is the 19th point I gave you. If it is for consideration, then it is supply under 71AA. Next, we are moving on to charge under CGST. Here it is like FCM or RCM. Along with that, we need to know whether it is taxable or exempted. So, see why I am discussing this is that only thing just to have a revision of the concept. Because in this, not only the question and answer, but along with that concept also going in our mind. This is the only way where we can brush up the entire concept at this given point of time. Okay, next. So, ABC Private Limited appointed Mr. Zakir as their independent director and paid him sitting fees of 1 lakh. So director, we don't have any exemption. It will be taxable. Moreover, we have one circular which says that director employee means not a supply. But independent director is not an employee. Remember, independent director is not an employee. So TDS will come under 194J. So due to that reason, it will become supply under 71A, and it will also come under RCM because director services to companies coming under RCM. Independent director, in the capacity of director only, he is providing service, so it will come under RCM. Micro Apparel's registered dealer in Chennai avails fashion designing service of 50 lakhs from Prabhu Designs in Singapore. So for this fashion designing service, we don't have any exemption, so it is taxable. And where it will come, it's an import of service. As it is an import of service, it will come under RCM. But one case, import of service will not come under RCM. Which case? So import of OIDR services. By whom? Non-taxable online recipient. Who is non-taxable online recipient? Any unregistered person who is importing services, or a registered person who is registered only for deducting TDS under GST. Okay. Then next one. Express parcel post service provided by Department of Post to a business entity. Aggregate turnover exceed threshold limit, that is irrelevant. So always Department of Post Services will be taxable. 3 exemptions only: postcard, inland letter, envelope less than 10 grams. Otherwise Department of Post taxable. And Department of Post Service will always be coming under FCM. So even though it is provided to business entity by government, but it will not come under RCM, it will be FCM only. Remember, Department of Post will always be FCM. ABC Limited avails service of Rudra Goods Transport Agency for transportation of goods from factory located in Mumbai to its Nashik depot and paid freight 1 lakh and applicable GST is 5%. GTA service. So many times we get confused in exam. GTA and courier taxable, but all other transportation will be exempted. So they'll say goods carriage. Goods carriage is not GTA, that is exempted. Transportation of goods by roadways, exempted. Okay, only when they use GTA, you refer GTA. And for GTA also we have exemption. What is that? Notified goods. So some specified notified goods, 6 notified goods. What are they? Agricultural produce, organic manure, then food grains, including flours, pulses, milk and salt. Then next, newspapers and magazines, relief materials for natural man-made disasters, defense and military equipment. Then another exemption for GTA service is what if the recipient is individual, HUF, AJP, trust, if they are unregistered and not having factoring. And next exemption is what if the recipient is registered only for deducting TDS, then also it is exempted. Otherwise, GTA service will be taxable. So here nothing is given, so definitely it will be taxable. And who will pay? Generally, whenever they use the word 5%, 5% rate means so RCM or FCM, both are possible, but the default option will be always RCM. Only if the GTA opts to pay GST under FCM, it will be 12% with the ITC or 5% without ITC. Otherwise, the default option will be RCM option. Be careful in that. So ABC Limited will pay GST under RCM. That's a default option. Then Bharat Jewelers sole proprietorship paid 50 lakhs for sponsorship of Miss India beauty pageant for sponsorship service. It will be taxable. And who will pay GST in this case? The organizer only will pay GST. Why? Because whenever the recipient is body corporate, sponsorship service, only one case it is exempted. What is the exemption for sponsorship services? If it is recognized sporting event, it is exempted. Otherwise, it will be taxable. Okay. And sponsorship service, what is the condition for RCM? Recipient should be body corporate or firm. When the recipient is other than body corporate or firm, it will be FCM. So here, the recipient is sole proprietorship. That's why it will come under FCM. Then Mr. Veer is an agent of life insurance company in rural area. So if there is a business facilitator or business correspondent of an insurance company working in rural area and getting a commission, that commission will be exempted. So accordingly, it is exempted and we don't have to bother about FCM or RCM. Then ABC Enterprises dealers in cars appointed Mr. A as recovery agent to recover the amount payable by the defaulters of EMI. So basically, recovery agent services will be taxable. We don't have any exemption for recovery agent. But remember, recovery agent only to bank or financial institution will or NBFC will come under RCM. But here recovery agent is for car dealer. That's why it will not come under RCM. It will be FCM. If it is bank, financial institution or NBFC, it will be RCM. Then next, X wants a commercial plot of land of 2000 square meters, is giving such land on lease for 30 years for a consideration of 2.5 crores to India builders who will construct a commercial complex. Generally, leasing of commercial land. Leasing of commercial land for construction of a commercial complex, we don't have any exemption. Definitely it will be taxable, but it will come under long-term lease. As it is a long-term lease, it will come under RCM. So there are three things: TDR, FSI and long-term lease. Given by builder, given by landowner to builder will come under RCM. So India builders will pay GST under RCM. Then what if it is a residential purpose? That is, I have given the TDR, FSI long-term lease to a builder and the builder is using it only for construction of residential units. Then it will be exempted. That is this 9th question. Okay. Next, Mr. Ramesh owns a commercial property and is given to Mr. Pacific Business Pacific Limited on rent, in which Mr. Ramesh is one of the directors. Consideration involved is 2 lakhs. So even though it is a director, but don't bring it under director service. It is renting of immobile property service only. So renting of commercial property will always be taxable. For commercial property, if supplier is unregistered, first you check supplier. Supplier is registered, no doubt FCM. If supplier is unregistered, check recipient. Is recipient registered? Yes, then it is RCM. What if both are unregistered? There is no GST. Here supplier is Mr. Ramesh. Nothing is given means unregistered. Again, recipient is Pacific Limited. Nothing is given means unregistered. As both are unregistered, GST not payable. What if Pacific Private Limited is registered? Then it will come under RCM. Okay. First check supplier. If supplier, that is commercial property, always taxable. Only one exemption is there for commercial property. What is that exemption? So minimum 90 days. I'm giving it on rent and the rent will be 20,000 rupees or less than 20,000 rupees per month. Then that is exempted. Otherwise, all commercial property will be taxable. Now you need to check FCM or RCM. What is that? First you need to see. Check the supplier. If supplier is registered, definitely FCM. Don't see anything else. If supplier is unregistered, check the recipient. If the recipient registered, yes, then RCM. If he is also unregistered, no GST. Okay, 3 points. Next. Mr. Madan appointed as arbitrator for handling an environment issue faced by Save Forest, a government agency. So generally arbitrator services, we have three exemptions. If they are giving it to a person other than business entity, if they are giving it to a business entity whose turnover during previous year does not exceed threshold limit, or if they are giving services to government or government authority, government entity, but not government agency. Government agency is different. So it is taxable. Who will pay GST? The government agency only will pay GST under RCM. Next, Bala Tour Operators, a partnership firm, provided cars on rent to Brainery Private Limited for transportation of its employees, and the rate mentioned in the invoice is 5%. So for renting of motor vehicles, we have four exemptions. What are the four exemptions? Number one, so first point, renting of motor vehicle that can carry more than 12 passengers to a local authority. More than 12 passengers. Which motor vehicle? Electric motor vehicle. Renting a motor vehicle that can carry more than 12 passengers to a state road transport undertaking. Renting a motor vehicle that can carry goods to a GTA. Finally, renting a motor vehicle to a person. That person is in turn providing services, transportation service to category 1 education institution. What is category 1 education institution? Education institution providing education up to 12th standard or equivalent. That, okay, so then it will be exempted, but here it is not given, so it is taxable. This is renting a motor vehicle. For renting a motor vehicle, when it will come under RCM, three conditions: supplier should be other than body corporate, recipient should be body corporate, and rate of GST should be 5%. Here supplier is other than body corporate, recipient body corporate, rate of GST 5%. That's why it will come under RCM. Okay, then next. So Tips Music Private Limited transferred the copyright related to music to a company for using the said music in their advertisement. Generally, temporary transfer of music is covered under RCM, but if it is by an individual, here a company is transferring, that's why it will come under FCM. Be careful. Then Rudra Limited has taken residential property for providing accommodation to its newly joined employees from Mr. Ashok and paid a consideration of 2 lakh per month. As it is commercial, even though it is a residential property, but it's a commercial purpose. So due to that reason, it will be taxable. Now, again, for residential property, if the recipient is registered, then only RCM. Otherwise, there is no GST. For supplier is unregistered. Supplier is unregistered. Recipient is also unregistered. So due to that reason, as both supplier and recipient are unregistered, GST is not payable. Be careful with respect to that. You end up writing FCM, RCM and all in exam. Because it is taxable, you write FCM, RCM. But both are unregistered means there is no GST. Eximit has taken security agency service from Task Force Security Limited, for which payment of 95,000 is made. So security agency services is taxable. Only in case of education institution, that to category 1 education institution, it will be exempted. Otherwise, it will be taxable. Okay. And therefore, and that to security agency services or housekeeping services to category 1 education institution within its premises. Okay. 1 second. Yes. So the next one, so we were discussing about this security agency services and security agency services. What is the condition for RCM? Supplier should be other than body corporate, recipient should be registered, and they should be registered only for the purpose of, like other than composition scheme or registered, but not for the purpose of deducting TDS. So therefore it will be FCM. Okay, then 16th point, Mr. Atul is a agent of life insurance company. The insurance company pays commission. So already I told you, insurance agent only if it is business facilitator or correspondent working in rural area, it is exempted. Otherwise it will be taxable. And generally when insurance agent is providing service to insurance company, it will come under RCM. Temporary transfer of copyright pertaining to music composed by Mr. A.R. Rahman to Arise Private Limited registered production company. So copyright, it is by individual. So the other question, Tips Music Private Limited is a company. That's why it will always come under FCM. But when it is by an individual, it will come under RCM. So Arise Private Limited will pay GST under RCM. Then service provided by Mr. Sham, a recovery agent to HDFC Bank. Recovery agent to bank, it will definitely come under RCM. But in the other question, it is to a car dealer, that's why it will be FCM. And for recovery agent service, always it will be taxable. Then temporary transfer of copyright on 510 pertaining to book. So generally, author transferring the copyright of a book to the publisher will come under RCM. That's a default option. But if the author want to opt for FCM, he can opt for FCM. Only in two places, this opting for FCM is there. One is GTA services, another is this author case. Okay. But in author case, if they opt for FCM, 1 year lock-in from the date of exercising the option. Service provided by Mr. Mohan, a business facilitator to Bank of Baroda for its rural branch. So business facilitator or business correspondent who is working for a rural branch, whether it is banking company or insurance company, both cases it will be exempted. And as it is exempted, the payment of GST will not arise. Surya Travels, registered person has given on hire an electric car. For electric car, only to local authority it is exempted, that to capacity more than 12 passengers. But here it will be taxable. And as the rate is given as 12%, it will not come under RCM, it will be FCM. Vijay Travels, Tempo Traveler, Swami Associates, 5%. So taxable. But why it will not come under RCM? See, for RCM, supplier should be other than body corporate, yes. Recipient should be body corporate, but recipient is firm. Remember, LLP will not come under body corporate because many of you might have this doubt. Will LLP come under body corporate? No. LLP for the purpose of GST will come under firm only, not under body corporate. Okay. Then next one. Zoom Cars Private Limited, a registered person has given a car on hire to XYZ Limited, and Zoom Cars Private Limited has opted to pay GST at the rate of 5%. Is it taxable or exempted? Taxable. And won't it come under RCM? No, because the supplier is body corporate. That's why it will be under FCM only. Innovate Private Limited paid 50 lakhs as sponsorship money to an event organized by Indian Hockey Federation. So recognized sports body. Due to that reason, it will be exempted. ABC Security Agency has provided security service to Future Limited. Future Limited is not registered. So security agency service only to category 1 institution is exempted. Otherwise, it will be taxable. And ABC Security Agency only will pay GST under FCM because the recipient is not registered. If the recipient is registered only, it will come under RCM. Then XYZ availed service of Vimal GTA, 12% is given. GTA usually taxable. As the rate is 12%, it will be FCM. Batra is arbitrator providing services to government agency. For government agency, no exemption taxable, and it will come under RCM. Remember, advocate service and arbitrator services, once it is taxable, it will always come under RCM. Okay. Then next one. Department of Police Tamil Nadu provided security services to Messrs. Taj Group of Hotels whose turnover during the previous year exceed the threshold limit and charges 20,000. So security services, we don't have any specific exemption, and we need to refer to the first general exemption. First general exemption is also not applicable because the turnover during the previous year exceed threshold limit, and the second general exemption is 5,000 rupees. That is also not applicable because the value here is 20,000. Due to that reason, it is taxable, and the Taj Group of Hotels will pay GST under RCM. Mr. Santosh received 40 lakhs as consideration for transfer of development rights related to a promoter. So TDR is taxable, and who will pay GST? RCM. Then ABC Road Lines, a GTA provided service to partnership firm for transportation of organic manure. Organic manure is there in the list of notified goods. Due to that reason, it will be exempted. GRT Premium Kitchen is located in GRT Regency, a 5-star hotel in Chennai, offering rooms in the ranges of 5,000 to 12,500 rupees per day, and such kitchen supplied food through Zomato to their premium customers. There are 4 services which are covered under 9 subsection 5, where the liability to pay GST is on e-commerce operator. What are those 4 services? HATE. H for housekeeping services, and A for accommodation service, T for transportation of passenger service, E for eating food in a restaurant. In case of first two, H and A, supplier should be unregistered, and the next two, supplier may or may not be registered. And this transportation of passengers, if it is by a company through omnibus, it will not come under 9.5. Supplier only will pay. Same way restaurant. If the restaurant is in the specified premises, what is the specified premises? So any hotel where the declared tariff per day is greater than 7,500 rupees. So here it is greater than 7,500 rupees per day. So it is a hotel, 5-star hotel. In that hotel, if there is a restaurant, if they provide through Swiggy or Zomato, so the restaurant only will pay GST. So 9.5 will not be applicable. Urban Clap, an e-commerce operator, facilitated housekeeping service in Delhi with a total taxable value of 2,50,000. The housekeeping service provider is registered under GST. Again, 9.5 will not come. Supplier only will pay. Why 9.5 will not come? For housekeeping service and accommodation service, supplier should be unregistered. Swiggy, an e-commerce operator, facilitated restaurant service in Mumbai with a total taxable value of 10 lakhs. In the month of July 2024, the restaurant is providing the service is not registered under GST. Let the restaurant be registered unregistered. So for T and E, last two, transportation and eating food in the restaurant, the supplier may or may not be registered. It will come under 9 subsection 5. Liability to pay GST is on the e-commerce operator. Then B Limited is a promoter of real estate residential project in Mumbai. One of the projects is situated in a Nariman Point. So residential complex having 27 floors. And during December 2021, B Limited procures the following services. So first what we need to see? First we need to see capital goods. Do we have capital good? No. Then we need to see cement. Cement is purchased from unregistered person. Procure the following from unregistered person. 5 lakhs is procured from unregistered person. So first we need to see cement. 5 lakhs into 28%. So even though it is procured from unregistered person, we need to pay GST under RCM at the rate of 28%. So 5 lakhs into 28%, 1,40,000. Then next we need to see others from unregistered person divided by total into 100. What is others from unregistered person? This 60 lakhs and this 40 lakhs. So 60 and 40, 100 divided by total. In total, you take everything. 15, 100 and 80, 195. So 51.2821%, which is more than 20%. How much is permitted? From unregistered person, only 20%, not cement, other than cement, only 20%. So beyond that, we need to pay GST at the rate of RCM, 18%. So therefore, 195 lakhs, beyond 20, how much? 31.2821% into 18%. So this we need to pay under RCM. So that is this. Then what will be your answer in the above case? If B Limited is a promoter of real estate commercial project. For commercial project, 9.4 will not come. 9.4 will be applicable only for residential real estate project. Remember that. Next. Mr. A, Director of XYZ Private Limited, provides personal services. Okay. And this personal services of renting of his immobile property to company. So basically it is a immobile property that will be taxable. But again same, Mr. A and XYZ Private Limited both are unregistered. So therefore there is no GST. A partnership firm operates a fleet of omnibuses and offers passenger transportation services through the Ola platform. Determine who is responsible for paying. Again, company. A company or partnership firm. Partnership firm. Even though it is omnibus, just because it is omnibus, don't conclude that 9.5 is not applicable. It is a partnership firm. That's why 9.5 will be applicable. If supplier is firm, e-commerce operator shall pay GST. 9.5 will come. If supplier is company only, supplier shall pay GST. Then we are moving on to IGST provisions. In that IGST provisions, so we have export of services. Remember the conditions for export of service. Total 5 conditions should be satisfied for export of service. What are the 5 conditions? Supplier should be other than supplier, location of supplier should be in India, location of recipient should be outside India, and place of supply should be outside India, and the consideration should be in convertible foreign exchange, and wherever it is permitted by RBI, it can be in Indian rupees. Supplier and recipient are not two establishments of the same person. If these 5 conditions are satisfied, then it will become export of services. So a software company in India provides services to a client in Russia, supplier in India, recipient outside India. The payment for the service is received in special rupee Vostro account. Special rupee Vostro account, even though it is received in Indian rupees, it is permitted by RBI. As it is permitted by RBI, it will be coming under export of services here. Okay, so therefore this question will come under export of services. ABC exports intends to export goods worth rupees 50 lakhs to Germany. The company opts to export under bond instead of paying IGST. There are 2 options for zero rated supply. So what are zero rated supply? Export of goods or services. Supply of goods or services to SEZ is known as zero rated. There are 2 options. Either they can export upon payment of IGST and get that IGST as refund, or they can export under bond or LUT without payment of IGST. So they opted for bond. Is it mandatory for ABC exports to execute a bond? No. Instead of bond, they can go for LUT also. Therefore, bond is not mandatory. LUT is letter of undertaking. Next, A Limited, a registered person in India, receives an order from B Limited in USA. Instead of shipping the goods from India, A Limited purchases the goods from C Limited in Singapore and directly ships them to B Limited in USA. So it is outside the country movement of goods. Where the goods are originating, Singapore, and where is it going, USA. Already we know that it is not a supply. Then a registered supplier in Delhi makes an interstate supply of goods to a buyer in Chandigarh. The IGST paid on the transaction is 40,000. How will IGST be apportioned? In that 40,000, 20,000 will go to central government and remaining 20,000 will go to the state government based on place of supply. So what is the place of supply? So here registered Delhi. So therefore union territory, a registered supply in Delhi, Chandigarh. Chandigarh is union territory without state legislature. So that's the reason why entire IGST will go to central government. There is no IGST apportionment as place of supply is union territory without state legislature. ABC Limited was subject to a penalty of 10,000 for late payment of IGST on an interstate supply. How will this penalty amount be apportioned between central government and the state government? So everything will be apportioned between central government and state government in what ratio? Equal ratio. All amounts, IGST, interest, penalty, late fees, apportioned between CG and SG in equal ratio. ABC Consulting Export Services and worth 6 lakhs to a foreign client but fails to receive the payment in foreign currency. Can the company claim a refund of ITC? And are there any condition for such claim under GST? What will be your answer if they are export of goods? Okay, so basically in case of export of goods, there is no condition that the consideration should be received in convertible foreign exchange. Okay, for export of goods, condition to receive consideration, in foreign exchange is not applicable. Foreign exchange is not applicable. But what about export of services? For export of services, it is applicable because one of the condition for export of services is that the consideration should be in convertible foreign exchange. Okay, one of the condition for export of services is that consideration should be in forex. Consideration should be in foreign exchange. Okay, then next one. A company located in Orissa supplies heavy machinery to an offshore platform located in territorial waters near the coast of West Bengal. How will the place of supply be determined under GST and what taxes will apply? So whenever the supply is in territorial waters, if POS is in territorial waters, if POS, place of supply, is in territorial waters, the nearest coastal state, what is the nearest coastal state here? That is West Bengal is place of supply. Where is the supplier located? Orissa. And place of supply will be West Bengal. Therefore, it is what? Interstate supply. It will come under interstate supply. Then next, ABC Limited, a marine logistics company in Mumbai, provides maintenance service to a ship operating in 180 nautical miles from the baseline. 180 nautical miles. Whether the GST law is applicable up to 200 nautical miles? Yes. So up to 200 nautical miles, GST law is applicable 180 nautical miles. So beyond territorial waters and up to 200 nautical miles. Okay. The ship is owned by an Indian company. How should this supply be classified under GST? Deemed interstate supply. Deemed interstate supply. Why it will come under deemed interstate supply? So as supply after territorial waters, What is territorial waters? Up to 12 nautical miles from baseline is territorial waters. Okay. So after territorial waters, but before exclusive economic zone. What is exclusive economic zone? Exclusive economic zone is 200 nautical miles. Territorial waters is 12 nautical miles. Exclusive economic zone is 200 nautical miles. Between this, if the supply takes place, it will be called as deemed interstate supply. But India is up to 200 nautical miles. For your information, India is up to 200 nautical miles from baseline. Okay. So remember, all these are some points which can be tested. Then next one, what we have is concept deals on exemptions under GST. So in that import of service, OIDR services, basically you need to remember, first you need to check A Limited unregistered imported consulting services from Hilltop Management Consultants Australia for a consideration of 10,000. As it is consideration 10,000, it is supply under 71B. The next thing that you need to check is that is it OIDR services? No, it is other than OIDR services. When it is other than OIDR services, you need to check non-taxable recipient. Whether A Limited will come under non-taxable recipient. No, who will come under non-taxable recipient? Individual trust government. Individual trust government. A Limited will be other than non-taxable recipient. So other than non-taxable recipient means it will definitely other than OIDR by other than non-taxable recipient. Other than non-taxable recipient. So therefore it will be taxable. We don't have any exemption. What is the exemption? Only when it is imported by other than OIDR service by non-taxable recipient, then only it is exempted, therefore it is taxable. And import of service, once it is taxable, definitely who will pay GST? A Limited will pay GST under RCM, but A Limited is unregistered. So there is something called as compulsory registration. So they have to compulsorily register, because once the GST is payable under RCM, they have to compulsorily register due to that reason. Then Mr. A unregistered imported marketing service from Facebook Incorporation USA against $100. The moment you see consideration, it will definitely become supply under section 71B. Okay, then 71B. And then we need to see, is it OIDR service? Yes, OIDR service. Why it is OIDR service? Marketing services na Facebook. So OIDR services. When it is OIDR services, what is your answer? Always it will be taxable. And is it by non-taxable online recipient? Yes. Who is non-taxable online recipient? Any unregistered individual, any unregistered person. So therefore it will come under FCM. So who will pay GST? Facebook Incorporation shall pay GST under FCM. Then next, Do Well Charitable Trust registered importer Microsoft USA OneDrive services for a consideration. The moment you see consideration, it will become supply under section 71B. Okay, once it becomes supply under 71B, and that too it is what OIDR service. What is OIDR service? First of all, any service which is provided over internet, will be coming under OIDR services. So as it is a OIDR service, if it is a OIDR service, always it will be taxable. So who will pay GST? So we need to check who is the recipient. The recipient is other than non-taxable online recipient. So therefore recipient, because they are a trust, registered trust. Only unregistered person will come under non-taxable online recipient. So here it will come under RCM. So that trust, charitable trust will pay GST under RCM. Then A Limited unregistered imported technical service from its holding company in UK without consideration. When it is without consideration, import of service from a related person. And without consideration, in the course or furtherance of business. So it is supply under 71C and it is technical services. So other than OIDR service, other than OIDR, by whom? By other than non-taxable recipient, by other than non-taxable online non-taxable recipient. See, only when it is OIDR service, apply non-taxable online recipient, otherwise it will be non-taxable recipient. So therefore it will be coming under taxable. So who will pay GST in this case? GST will be payable by recipient, that is A Limited will pay GST under RCM, but sir, it is given as unregistered, so they have to compulsorily get registered. PQR and Company, a partnership firm, unregistered imported cloud computing service from Microsoft Incorporation USA against a consideration of $4,000. The moment you see consideration $4,000, supply under section 71B, and it is what service it is? OIDR services. Yes, cloud computing is OIDR service. So if it is a OIDR service, the answer will be always taxable. So when it is always taxable, then who will pay GST? So it is imported by non-taxable online recipient. So I told you OIDR, apply NTOR because they are unregistered. So supplier outside India. Who is a supplier outside India? Microsoft Incorporation. So will pay GST under FCM. Then Jatin, a proprietor, has received the architect service for his house in Banja from an architect located in New York at an agreed consideration of 5,000. So import of service for a consideration, no doubt it is supply under 71B. But what services it is? Other than OIDR services, because it's architect service na. Other than OIDR, by whom? By non-taxable recipient. Who is a non-taxable recipient? Individual trust government. Individual for personal purpose. So non-taxable recipient. Therefore, it will be coming under exempted. When it is exempted, the payment of GST shall not arise. Then ABC Associates received technical support service from its head office located in Malaysia. The head office has rendered such services free of cost to its branch office. So it is supply under 71C. And ABC Associates, importing technical support service means it is other than OIDR service. And who imported it? Other than OIDR services by other than non-taxable recipient, because ABC Associates na. So other than non-taxable recipient, it will be taxable. Therefore, taxable. Who will pay GST? So definitely it is RCM. So ABC Associates. ABC Associates will pay GST under RCM. Then next, Raman is an e-commerce operator in Chennai. GST registered. His son, who is settled in London, is a well-known lawyer. Raman has taken legal advice from him free of cost. So import of service from a related person. Yes, son is always related, whether or not dependent. So therefore, it is import of service from a related person without consideration. But it is not in the course or furtherance of business related to family dispute. That's why it is not a supply. When it is not a supply, the payment of GST does not arise. Then Raman is an e-commerce operator in Chennai, GST registered. His brother, who is settled in London, is a well-known lawyer. Raman has taken legal advice from him free of cost with regard to his business matter. Now, in this case, first of all, is it import of service from a related person? No. Why? Because brother will come under related. What is the meaning of family? So, family means children and spouse, whether or not dependent, will come under family. But brothers, sisters, parents, grandparents will come under family if they are wholly and mainly dependent. Okay, otherwise they are not. Here, brother is not dependent. That's why it is not a import of service from a related person. Consequently, not a supply and the payment of GST shall not arise. And then central government received legal advice for litigation with respect to security concerns for Indians in UK and paid £1,000 as legal fees. The moment you see consideration, it will come under supply under section 71B. When it is supply under section 71B and it is what service? Litigation means other than OIDR service. Other than OIDR. By whom? By non-taxable recipient. As it is by why non-taxable recipient? Who will come under non-taxable recipient? Individual, trust, government. So government. So by non-taxable recipient, therefore it will be exempted. When it is exempted, the payment of GST shall not arise. Then advocate services. Advocate services, we have 4 exemptions for individual advocate and firm of advocate. So individual advocate, other than senior advocate, providing service to another individual advocate, always exempted. Don't see anything. So let it be a senior advocate or normal advocate. If one individual advocate or firm of advocate providing services to another individual advocate or firm of advocate, it will be exempted. Then firm of advocate providing services to A Limited, and it is a business entity. So check the business entity turnover during previous year. The turnover during previous year is 18, which does not exceed the threshold limit of 20 lakhs. So due to that reason, it will be exempted. Then firm of advocate providing service to A Limited. Aggregate turnover during previous year is 16 lakhs. But the threshold limit is 20 lakhs. As aggregate turnover during previous year does not exceed threshold limit, again it will be coming under exemption. Okay. Then next, individual advocate other than senior providing services to partnership firm, normal partnership firm, engaged in exempted supplies whose aggregate turnover is 80 lakhs. So as the turnover during previous year exceed threshold limit, it will be taxable. But remember, as they are making only exempted supplies, they are exempted from registration. If a person is exempted from registration under section 23, really they are exempted from registration under section 23. And you don't have to apply compulsory registration to them. Okay. So they are exempted from registration. Section 23 overrides section 24, GST not payable. Be careful in this place. Okay. So how many hours video, sir? Hardly like 10 o'clock here. We will be completing. Already see many students have left because not serious guys, idiots. Last minute also they don't want to listen to the classes. Even those who want to leave, no issue. But I will take, okay, because at least 1 or 2 students will get benefited out of this. So that's the reason. Then next, senior advocate providing services to individual. What is your answer? Senior advocate to individual, normal individual, it will be exempted because individual advocate or firm of advocate or arbitrator providing services to a person other than business entity will be coming under exempted. Senior advocate to government agency whose aggregate turnover during previous year exceed threshold limit for registration. Government agency also like a business entity only. So therefore it will be taxable under RCM. There is an arbitrator who is providing services to a company, A Limited, whose aggregate turnover during previous year does not exceed threshold limit, then it is exempted because arbitrator or advocate or firm of advocate, if they provide service to a business entity whose turnover during the previous year does not exceed threshold limit, then it is exempted. Okay. Then senior advocate providing service to firm of advocate. Now, when senior advocate is providing service to another individual advocate or another firm of advocate, who should be taken as recipient? The recipient will be ultimate litigant or applicant or petitioner. So who is the ultimate litigant, applicant or petitioner? XYZ Limited. And now you see XYZ Limited. It's a business entity. Turnover during previous year exceed threshold limit. Therefore, it will be taxable under RCM. So XYZ Limited shall pay GST. Then senior advocate to individual advocate. Again, who should be the recipient? Ultimate litigant, applicant or petitioner. Who is that individual other than business entity? So any service provided to a person other than business entity, advocate service, arbitrator service is what? Exempted. So therefore it is exempted. Then transportation services. Passenger transportation, metro travel, metro, mono, tramway will be always exempted. Then air travel. For air travel, passenger transportation, do we have any exemption? Yes, two exemptions. If the starting point or ending point is in northeastern states or Bagdogra West Bengal, economy class, then it will be exempted. Or viability gap funding, 3 years, money received from government is exempted. Here nothing is given, so taxable. Passenger transportation, radio taxi, we don't have any exemption, taxable. Rail travel in sleeper class. In case of train, what are taxable? First class AC is only taxable, all others will be exempted. So therefore, rail travel in sleeper class will be exempted. Courier agency service, the moment you see courier, GTA courier will be taxable, no doubt. Transport of pilgrims by cable car, we don't have any exemption for cable car. Then aerial tramway, ropeway, etc. and all. So therefore, cable car and ropeway will be taxable. Rail travel by general class, it's not AC or first class, so exempted. Passenger transportation, rail travel by first class AC, 2-tier AC, 3-tier AC, all these will be taxable. National waterways, remember, transportation of goods or transportation of passengers by national waterways means inland waterways. Coastal water means sea. Land water, that is river, will be national waterways, that will be exempted. Passenger transportation by AC stage carriage will be taxable. Passenger transportation by non-AC contract carriage for tourism, generally non-AC contract carriage other than tourism or hire will be exempted. If it is for tourism, then it will be taxable. Transport of chemical fertilizers is not in the list of goods. Due to that reason, it will be taxable. Defense and military equipment, yes, notified goods, exempted. Postal mails, not notified, taxable. Household effects, not notified, taxable. Petroleum product, not notified, taxable. Relief material, notified goods, so therefore it is exempted. Newspapers and magazines also notified. Milk is also notified. Rice is also notified. Where sir, rice is notified? Food grains, under food grains, rice is notified, so therefore it will be exempted. Transportation of alcoholic beverages, not notified, therefore it will be taxable. Transportation of passenger from Chennai to Gujarat port in vessel other than for tourism purpose, generally coastal waters, if you transport the people between India for public transportation, that will be exempted. Then education services, tuition fee collected by school, so any service provided by an education institution to its students, faculty and staff is exempted. So what is an education institution? Up to 12th standard, or education as a part of curriculum for obtaining a qualification recognized by law, or occasional education. So tuition fees collected by a school, definitely exempted. Any fees collected by education institution will be exempted. Exam fees collected by school, exempted. Then annual function trip, school, any fees exempted. Okay, so any fees, whatever name it may be. Placement service provided by college, corporates. Here the recipient, see, education institution to individual, like school providing students, faculty, staff is only exempted. Corporates and all is not exempted, that will be taxable. Then renting of auditorium by a school for conference, we don't have any exemption, taxable. Renting of hall by a school for marriage function against a consideration of 8,000, that is also taxable. Only to student, faculty, staff is exempted. Okay, then franchisee fees collected by school from XYZ Limited, we don't have any exemption, that will be taxable. Fee collected by play school, is coming under category 1 education institution up to 12th standard or equivalent, therefore it is exempted. Fee collected by higher secondary school Vidya Bhavan, that is also exempted. Fee collected by focus education, it's a coaching center, coaching centers will not be coming under education institution, due to that reason it will be taxable. Service provided by IIM is an education institution, but if they are offering any course which is of less than 1 year, then it will be taxable. Service provided by Anant Academy, examination, CPA USA is not a recognized educational qualification in India, due to that reason it will be taxable. Running a boarding school means, first of all, it is a school, so any service, even hostel facility provided by school also will be coming under exemption, so therefore it is exempted. Conducting private tuitions, we don't have any exemption, taxable. And home tuition at student's house, that is also taxable. Conducting modular employable skill course, that comes under vocational education, therefore it is exempted. Renting a premise by a college for running a canteen, providing food to the students, that will be taxable. Why? Because supply of food, catering services only to category 1 education institution is exempted. You be careful in exam, you check whether it is service provided by education institution or to education institution, okay, otherwise definitely will make a mistake, because when it comes to by education institution, everything is exempted, but when it comes to education institution, so transportation, housekeeping within the premises, security within the premises, catering, so for category 1 education institution is only exempted, category 2 and 3 will not be coming under exemption, that is this point. Then next, training program, so offered by a school to its teachers to improve their knowledge. So yes, training services to whom they are providing staff, therefore it will be coming under exemption. Housekeeping service provided by Cleanwell Manpower Agency to Himaja School for the annual day function. It is not within the premises, it is outside the premises. Due to that reason, it will be taxable. Transportation service provided by ABS Travels to college by way of transportation. So only transportation service provided to school will be exempted. Transportation service provided to college or any other place will be coming under taxable. Okay. Then next. So this is like mix of all. Discuss whether the following activities are taxable and exempted along with brief justification. Karnataka Cricket Association, Bengaluru requests Commission of Police. Basically, Commission of Police is government. Government providing services to business entity, security services. So we need to check only general exemption. So general exemption number 1, turnover during the previous year should not exceed threshold limit. But here turnover of the association during previous year exceed threshold limit, so that will not come. Second general exemption. Second general exemption, value of supply should not exceed 5,000. But here it exceeds 5,000 rupees. Due to that reason, it will be taxable. Then service provided by senior advocate to firm of advocate who in turn provides service to XYZ Limited. Now we need to see XYZ Limited as a recipient. And they are business entity whose turnover during previous year exceed threshold limit. Therefore, it will be taxable. Once it is taxable, and here it is only about taxable or exempted. Z Limited, a tour operator, provides tour operator service. So tour operator service provided by Indian tour operator to a foreign tourist in relation to the tour fully conducted outside India is exempted. If the tour is partly in India, partly outside India, then also it will be exempted proportionate to the number of days the tour is conducted outside India, or total consideration into 50%, whichever is lower is only exempted, remaining will be taxable. While counting this number of days outside India, if it is 12 hours or more than 12 hours, you consider it as full day. If it is less than 12 hours, you consider it as half a day. Okay. So here it is like 5 days and 10 hours in Goa. 5 days and 10 hours, so less than 12 hours. So 5.5 days in India. 4 days, 13 hours in Maldives. So 4 plus 1, because 13 hours means more, 12 or more, so it should be taken as full day. So total 10.5 days. Number of days outside India is 5. So 10 lakhs into 5 by 10.5 or 10 lakhs into 50%. So 5 lakhs, whichever is lower. So this is only exempted and the remaining will be taxable. A consulting firm in India provides service worth 25 lakhs to RBI related to foreign exchange reserves management. So we don't have any exemption with respect to services provided to RBI. So it will be taxable. And if supplier in India or outside India, the said activity is not covered in notification 12/2017. That's what it is not covered in exemption. A foreign diplomatic mission receives in India receives services worth rupees 40 lakhs from local suppliers. Remember, only services provided by foreign diplomatic mission by foreign diplomatic mission is exempted, but this is not by. It is to foreign diplomatic mission. That's why it will be taxable. A charitable trust rents out a religious place meant for general public for a wedding ceremony, 15,000. That's why it will be taxable. If it is less than 10,000, that is 9,999 per day, then it will be exempted. Then a technology business incubator service, always it will be exempted, no need to read. A regional airline earns 50 lakhs from passenger transportation service under regional connectivity. Such amount is received in 4th year. That's why it will be taxable, because the exemption is only for a period of 3 years. Okay. A common biomedical waste treatment facility charges 12 lakhs for the treatment of waste from various clinical establishments. We don't have any exemption now, therefore it will be taxable. Tirumala Tirupati Devasthanam owns residential complex in Tirumala. These are given on rent to pilgrims who visit Tirumala for darshan. Daily rent category 800, less than 999, that is up to 999 rupees per day exempted. So 800 exempted, but this 1,500 and 3,500 rupees will be greater than or equals to 1,000 per day, therefore it will be taxable. Transportation of passenger by air in economy class, service provided by Indigo Airlines from Sikkim to Mumbai. If the starting point or ending point of the passenger is in northeastern state, Sikkim is a northeastern state, therefore it will be coming under exemption. What will be your answer in the above case? If it is not economy class but business class, though there is no exemption, it will be taxable. The exemption is only for economy class. Then Pune Municipal Corporation charges 40,000 as registration fees for opening a shop in the market near railway station. So it will come under registration charges for any under any law for the time being in force, specific exemptions. Therefore, it will be exempted. Delhi edition of Hindustan Times is transported by rail for a freight of 12,000 from New Delhi to Kolkata. So transportation of newspapers and magazines by rail is coming under notified goods. Therefore, it will be exempted. What are the 3 notified goods transportation will be exempted? If it is transported by GTA, it is exempted. If it is by railways, it will be exempted. And if it is by vessel between places in India, then it will be exempted. Then IIM Ahmedabad charges 350,000 per company for participating in the campus recruitment to select students for providing job. So they are collecting money from corporates. Due to that reason, it will be taxable. Then Kerala Industrial Development Corporation gives an industrial plot of land to X Limited on lease for a period of 85 years. One-time lease rent being 30 lakhs. This plot will be utilized by X Limited for development of infrastructure for finance business. We have an exemption. What is that? Long-term lease of land by SIDCO, State Government Industrial Development Corporation, to a person. So for what purpose? It is for development of infra for finance business is exempted. But what is exempted? Only upfront charges is exempted. Okay. So therefore, this one-time charges is only exempted. Other charges will be taxable. That is this. General insurance provided by Max Bupa company under Pradhan Mantri Suraksha Bima Yojana. It's a notified scheme and it is exempted. Shaker providing catering service to Osmania University, taxable. Only to category 1 education institution it is exempted. Service by way of access to Mathura Lucknow highway on payment of toll charges. Toll charges is always exempted. Only by way of annuity it will be taxable. Skill Up Private Limited provides skill development training services to economically weak students, where the cost per student is 90,000 but they collected 9,000. So which means if the government has gone more than 75%, so 75% or more, definitely that particular training program itself will be exempted. Entire training program. ABC Limited received a service from the central government relating to transportation of goods by rail on 5th October. The service was provided as a part of interstate supply. Discuss whether this service is exempt and who is liable to pay GST. See, only transportation of specific goods by railways is exempted. Here they have not given. So due to that reason, it will be taxable. The municipal corporation provides horticulture services for maintaining public parks. So this is specific services provided by government, interdepartmental service. One department of central government or state government to another department of central government or state government, it will be coming under exemption. Then a shopping mall provides electricity to its tenants as a part of composite supply that includes renting space. The electricity charges are billed separately. So as it is billed separately, that's an exempted supply because transmission and distribution of electricity will be exempted. A private contractor provides service related to solid waste management to government authority. For government authority, solid waste management is an activity which is covered, so therefore it is exempted. Then a contractor supplies services related to public health and sanitation. That is also covered under the pure services. Therefore it is exempted. District Mineral Foundation Trust established by state government. So it's a government authority. Any service provided by government authority will be exempted. Indian Railways of South Central Zone. One zone or division of railways to another zone or division of railways. Latest amendment that will be exempted. Tamil Nadu Board of Secondary Education collected 8,50,000 from Chetan Vidyalaya for providing affiliation services. Affiliation services only collected from government schools. So government schools, that is school owned or controlled or managed by government, then only that affiliation fees will be exempted. But it is a private school, therefore it will be taxable. Then next we have time of supply. Say this, concentrate. So we will try to complete. So ABC Limited received an advance payment of rupees 1 lakh from XYZ Private Limited on March 1, 2024 for supply of goods. The goods were dispatched on March 10 and the invoice was issued on March 12. So first we need to see it is goods. Goods under FCM. Goods under FCM, what will be taken as the time of supply? Due date of invoice or actual date of invoice, whichever is earlier. So what is considered as the due date of invoice? So supply involves movement of goods at the time of removal. At the time of removal will be 10th March. So 10th March 2024 or the actual date of invoice. What is the actual date of invoice? March 12. Whichever is earlier. So 10th March will be taken as the time of supply. Then PQR Limited provided consultancy services to MNO Limited on April 1. The invoice was issued on May 10. Payment was received on May 20. This is services under FCM. Service under FCM, we need to check whether the invoice is given within 30 days from the date of completion. So the date of completion is April 1, but the invoice is given on May 10. No, not within 30 days. So we need to take date of completion or date of payment, whichever is earlier. What is the date of completion? The date of completion will be 1/4/2024 and the date of payment will be 20th May 2024. Whichever is earlier will be 1/4/2024. Okay. Then TF Limited entered into contract with GHI Limited on January 1st for supply of IT services over 12 months. As the service is provided over 12 months, it's a continuous supply of services. Milestone payments are due every 3 months. The first milestone was completed on March 31st and the invoice was issued on April 5th. As the invoice is as the payment is connected to event, so therefore the due date of invoice will be taken as the due date of event, that whenever the event is completed. So when the event is completed March 31st, so that is the due date of invoice. But what is the actual date of invoice? April 5th. So as the invoice is not given within the due date, again the time of supply will be completion date or payment date, whichever is earlier. So the completion date will be March 31st. Payment date not given here, so whichever is earlier will be March 31st. ABC Limited imported goods from a foreign supplier on August 1st. Invoice is issued on the same date. The bill of entry was filed on August 5th and the goods were cleared from customs on August 10th and entry duly made in the books on the same day. The payment was made on August 15th. So it is import of goods. Goods covered under RCM. In case of goods under RCM, 3 dates we need to take. Date on which goods are received. The date of receipt of goods will be 10/8/2024 and the date of payment. What is the date on which payment is made? The payment is made on 15/8 and Next we need to see, so 31st day from the date of invoice. 31st day from the date of invoice is 1/9, because August 1st na 31st day 1/9, whichever is earlier will be 10/8. ABC Limited provided consultancy services to XYZ Limited. The contract value was 5 lakhs. An advance of 1 lakh was received on October 1, and the final payment of 4 lakhs was received on November 15. The service was completed and the invoice was issued on November 10. So this is services under FCM. In case of service under FCM, we need to check first advance balance amount, because for every payment, remember, there will be separate time of supply. So first for advance, service under FCM. So invoice date or payment date, whichever is earlier. What is the invoice date? So 10/11 is the invoice date. Payment date will be 1/10, whichever is earlier will be 1/10. And for the balance amount, the date of invoice will be 10/11 and the payment date will be 15/11, whichever is earlier will be 10/11. Okay. So then next one, DF Private Limited supplied goods continuous supply of services to GHA Limited under contract that requires payment every month. The goods for the month of January were supplied by January 31st, but the invoice and account statement was issued on February 5th. The payment was received on February 10th. The payment is not based on account statement. Simple. First of all, it is goods covered under FCM. When it is goods under FCM, we need to take due date of invoice or actual date of invoice, whichever is earlier. What is the actual date of invoice? Actual date of invoice is clearly given as February 5th. What is the due date of invoice? Due date of invoice means here it is a continuous supply of services. Whether the payment is based on account statement, no. When the payment is not based on account statement, the payment received date, what is the date on which the payment is received? So the payment is received on February 10. So February 10 will be taken as due date of invoice. Whichever is earlier will be 5/2/2024. Okay. Then what about the balance amount? For the balance amount, whenever it is received, whichever is earlier will become 5/2 only. Okay. Next, GHI Limited sent goods to JK Limited on a supply on approval basis, sale on approval or return basis. What is the due date of invoice? 6 months from the date of removal or date of acceptance, whichever is earlier. On June 1, JK Limited accepted the goods on June 30. The invoice was issued on July 1st and the payment received on July 15. So goods under FCM again, same due date of invoice or actual date of invoice, whichever is earlier. What is the actual date of invoice? The actual date of invoice is July 1st, 2024. What is the due date of invoice? 6 months from the date of removal. So it is 6 months from the date of removal, June 1st to 6 months, or date of acceptance, whichever is earlier, June 30 itself is the due date of invoice. So whichever is earlier will be 30th June. Then MNO Limited entered into contract to provide consultancy services to UBW for a period of 1 year starting from January 1, 2024. An advance payment of rupees 2 lakhs was made on January 1st. However, the contract was terminated early on June 30. A final invoice was issued on July 5 for the services rendered. The payment was received. This is what again, service under FCM. Service under FCM, just check whether the invoice is given within 30 days or not. So here basically, what is the date on which the contract was completed? Completed on June 30. Invoice was on July 5th. No, because in case of cessation of service, the invoice should be given immediately. As the invoice is not given immediately, we need to take completion date or payment date, whichever is earlier. First for advance. For advance, completion date will be 36 and the payment date will be 1/1, whichever is earlier 1/1. For the balance, completion date will be 36 and whenever the payment is received, July 15, whichever is earlier will be 36. Then ninth one, ABC Limited located in India receives consultancy services from its associated enterprise in USA. So in case of import of services from associated enterprises, the date on which payment is made to such associated enterprises or date of entry in the books of recipient, whichever is earlier should be taken. What is the date on which payment is made? 15th March. What is the date on which entry is made in the recipient books? 1st March. So whichever is earlier will be 1st March. A retailer issues a voucher on 10th January which is redeemable for specific services at any of its branches. The voucher is redeemed on 20th February. When will the time of supply arises? For specific services. For specific service means identifiable voucher. For identifiable voucher, the date of issuance of voucher will be taken as the time of supply. So what is the date of issuance of voucher? So 10th January will be taken. A hotel issues a general voucher on 5th May, which is redeemable for various services. The voucher is redeemed on 15 June. When will the time of supply arises? So it is identifiable or non-identifiable voucher or non-identifiable voucher. In case of non-identifiable voucher, we need to take at the time of redemption of voucher. What is the date of redemption of voucher? 15th June. So 15th June will be taken as the time of supply. A service is provided on 10 September and no invoice is issued. The recipient records the receipt of service in their books on 15 September and the payment is made on 25th September. What will be the time of supply in this case? See, whenever there is no information from the supplier books, we need to check the recipient. The date on which recipient enters in their books, that will be taken as the time of supply. When there is no information in supplier records, date of entry in the books of recipient is time of supply, that is 15th September will be taken. Then next one. So we are moving on to place of supply. So place of supply, carefully listen. Place of supply, you may get a standalone question, or in the first question, that is a 10 marks question, application of computation of net GST payable is there na. There also this question on place of supply will be coming. Okay, like application of place of supply will come. So please revise this without forgetting. Tomorrow, ABC Limited in Maharashtra sells goods to XYZ Limited. Goods. Sell goods to XYZ Limited registered in Karnataka. The goods are dispatched from ABC Limited's warehouse in Maharashtra and are delivered to XYZ Limited office in Karnataka. Dispatched. Dispatch means what? Supply involves movement of goods. When supply involves movement of goods, what will be taken as the place of supply? The place of supply will be taken as the ending point. So what is the ending point in this case? The ending point is Karnataka. So Karnataka will be taken as a place of supply. Supply involves movement of goods. B2B, ending point will be taken as the place of supply. PQR Limited in Gujarat place an order with DF Limited in Rajasthan to supply goods to MNO Limited in Maharashtra. The goods are shipped directly from Rajasthan to Maharashtra. So here it is like a bill to ship to transaction. Why bill to ship to transaction? PQR is placing the order with DF, but the goods are delivered to MNO Limited. So for DF Limited, so we need to take billing address. So bill to ship to place of supplies billing address. What is the billing address? Who placed the order? PQR Gujarat. So Gujarat will be taken as a place of supply. Okay. Then next one. ABC Limited in Kerala supplies food products to a cruise liner which is located in the port of Chennai, Tamil Nadu at the time of supply. The goods are to be consumed on board the vessel while it is traveling from Chennai to Andaman and Nicobar Islands. Okay, so what will be taken? This is basically what supply of goods on board a conveyance. In case of supply of goods on board a conveyance, so the starting point of the goods should be taken as a place of supply. So starting point is where the goods are loaded. The goods are loaded in Chennai, Tamil Nadu. So that's the reason why we will take that as the place of supply, even though it is consumed during Chennai to Andaman, but where the goods are loaded, in Chennai it is loaded. That's why Chennai, Tamil Nadu will be taken as place of supply. Then PQR Limited in Uttar Pradesh sells machinery to STU Limited in Madhya Pradesh. STU Limited requests the machinery to be installed. The moment you see location like installation, supply of goods that requires installation or assembly at site, the location where it is installed or assembled will be taken as place of supply. So goods installed at site, place of supply will be location of installation. Where is it installed? In Madhya Pradesh. So therefore that will be taken as place of supply. Next, ABC Limited in Delhi provides architectural services for a new commercial complex in Mumbai, Maharashtra, owned by XYZ Limited, headquartered in Gujarat. So architectural service means what? Service in relation to immovable property. For service in relation to immovable property, what's the place of supply? Location of property. What if the property is outside India? Then location of recipient. So here property in India only, na, location of property, that is Maharashtra, will be taken as place of supply. A customer from Karnataka visits a restaurant in Goa operated by DF Limited and consumes a meal. The customer pays the bill using the credit card issued in Karnataka. Let it be. What is it? Supply of food. Supply of food means performance-based services. So supply of food, catering, food and beauty. I told you, food and beauty always location of performance. Okay. So where is the location of performance? So that is a restaurant. Where the restaurant is located? Goa. So Goa will be taken as place of supply. Then PQR Limited, based in Tamil Nadu, organizes a training workshop for employees of GHA Limited located in Rajasthan. The training is conducted physically in Chennai, Tamil Nadu. What will be your answer if GHA Limited is registered and registered? So I told you TOT. Training and performance appraisal, organizing an event, and transportation of goods or passengers. In these three places, we need to check B2B, B2C. So B2B, location of recipient, B2C depends. Okay, here it is training and performance appraisal. If it is B2B, we need to take location of recipient. If it is B2C, we need to take location of performance. Okay, so training and training services, B2B, location of recipient, that is Rajasthan. B2C, location of performance, that is Tamil Nadu. Then LMN Limited in Punjab arranges for the transportation of goods from Haryana to Madhya Pradesh for their client ABC Limited, headquartered in Gujarat. B2C. So transportation, again transportation, we need to check B2B, B2C. For transportation of goods, B2B, location of recipient, B2C, starting point of the goods. So what is the starting point of the goods? From Haryana is given. So Haryana will be taken. Transportation of goods, starting point of goods. Transportation of passengers, starting point of passenger. Services on board a conveyance, starting point of conveyance. These three. Okay. Then XYZ Limited in Maharashtra subscribes to a mobile connection from a telecom service provider in Karnataka. The connection is used primarily in Maharashtra. So for telecommunication service, you need to check mobile or landline. It is mobile. Again, is it postpaid or prepaid? So mobile connection So they have not given anything. So that's why we will apply general provision, location of recipient in the records of supplier. That is, connection is used primarily in Maharashtra, but what is the location of recipient? XYZ Limited in Maharashtra subscribe, so that Maharashtra only will be taken. Okay. Then MNO Limited in Tamil Nadu provides advertisement service to Government of Kerala for promoting tourism in Kerala. The advertisements are broadcast nationwide. So even though it is broadcasted nationwide, but specifically the service is provided in the state of Kerala, so that will be taken if clearly the amount is known. If the amount is not known, so we need to take across the country. Advertisement service to government, pays of supply is each state apportioned in expenditure ratio. Then a logistics company based in India provides transportation service to a client located in India for transportation of goods from India to US. What is the place of supply in this case? Transportation of goods, B2C. B2C always starting point. So starting point of goods, that is India. An advertising company in Delhi hires space on billboards located in Mumbai from a vendor for 2 lakhs. So in case of sale of space for advertisement, so by vendor to advertising company, it is service in relation to immobile property. For advertising company to the client, it will be general provisions. So first, vendor to advertising company, location of property. Advertising to company to client will be general provision. Then an unregistered customer from Karnataka buys goods over the counter in Maharashtra and transports them to Karnataka. The invoice issued mention only the customer name and state determine the place of supply. See, supply involves movement or does not involve movement? Does not involve movement, because the supplier is handing over the goods at the supplier's place itself. Thereafter, recipient is transporting, but supply does not involve movement of goods. Supply already over. Then in that case, location of goods at the time of delivery will be taken. But if it is B2C, location of recipient in the records of supplier. So location of recipient in the records of supplier, that is Karnataka. Remember, 10(1)E and 10(1)C. Supply involves movement of goods. Supply does not involve movement of goods. In these two cases, B2B, supply involves movement of goods. B2B, ending point. Supply does not involve movement of goods. B2C, location of goods at the time of delivery. But in both the cases, B2C is common. That is location of recipient in the records of supplier, otherwise location of supplier. Then 14. Navta, a transporter registered under GST located in Vijayawada, whether C Limited of Chennai, not registered under GST, received service from Navta for transportation of goods from its warehouse in Vijayawada to Singapore. Navta delivered the goods at Singapore. Would your answer change if it is transportation by mail or courier? Basically, transportation of goods, B2C, starting point of the goods will be taken. So where is the starting point? So that is in Vijayawada. If it is mail or courier also, it will be the same. There is no change in that. Mr. Remo, located in Mumbai, is a best choreographer. He has been appointed by Dancit, now unregistered present in Mumbai, as a judge to appraise the performance. So training and performance appraisal. Again, it is B2C. So we need to see location of performance. Where is it performed? Mumbai. Bengaluru. Bengaluru only it is performed. So that will be taken as place of supply. Swami Limited of Chennai acquired the business of SA Limited at Johnsonburg, South Africa. Swami Limited entered into contract with Messrs. Christian Krish Architects Chennai to do the interiors of the building of new business at South Africa. This is service in relation to immobile property. Always we need to see location of property. Where is the property located? The property is located outside India. As a property is located outside India, location of recipient will be taken as a place of supply, that is Chennai. A vessel Bima owned by Sea King Logistics incorporated in Singapore, sailing from USA to Australia via India, carries various types of capital goods. And who is the supplier? Supplier is logistic company outside India. Recipient is also outside India. As both supplier and recipient, okay, as both supplier and recipient are located outside India, So what is your answer? As they are located outside India, so it is exempted. All services are exempted. Okay, be careful here. Whenever the supplier of service is outside India, recipient of service also outside India, all services will be exempted. Okay. Then next, Superbus Limited, based in Pune, provides services of transportation of passengers to tour companies. One tour company based in Mumbai engaged a service of Superbus Limited to transport passengers from Karnataka to Goa for a holiday package. Tour company is a registered supplier of tour services. All passengers will board the bus from various places in Karnataka. So transportation of passengers, we need to check B2B, B2C. So B2B, location of recipient. Okay. So here it is B2B only because the company is registered. So therefore location of recipient will be taken. Next, the government has hired 200 hoardings in Lakshadweep and 175 hoardings in Chennai for providing advertisement of gas subsidy, and contract contains a consideration for these hoardings separately. Hoarding service supplied by X Limited, located in Hyderabad. So for a contract price of 10 lakhs. So this is advertisement services to government. So what will be the place of supply? Each state where the advertisement is provided, that is Lakshadweep and Tamil Nadu, because we have clearly the information in the contract. So based on that we need to divide. Then Z Limited is engaged in fertilizer manufacturing in Karnataka. It has GST registration in Karnataka. Z Limited does not have GST registration in any other state. Tapas is head of finance of the company. Tapas goes to Mumbai to attend a 3-day conference on international finance organized by Harvard Business School. They have given for few expenditure. Expenditure number 1, Bengaluru Mumbai air ticket paid to Air Shakti 26,000. So transportation of passengers, B2B, a B2C, a B2B, because in all these expenses the recipient GSTN is mentioned. So B2B, location of recipient. What is the location of recipient? Karnataka will be taken. Okay, and in this regard, one important point you need to remember: CGST, SGST paid in the other state cannot be taken as ITC. Keep that in mind. Okay. So I am registered in Tamil Nadu and I have received some services in Karnataka. So location of supplier also Karnataka, place of supply also Karnataka. So it is CGST, SGST in Karnataka. Now in Tamil Nadu, can I take ITC? No. So this they will be testing. Okay. CGST, SGST paid in other state. In this state, you cannot take ITC. IGST you can take, but CGST, SGST paid in another state cannot be taken as ITC. Keep that in mind. Okay. Then next one. So B point, 3-day conference participation fee paid to Harvard Business School taken registration in Mumbai as a casual taxable person. So here for conference participation means admission to an event. Admission to an event, always location of event will be taken as the place of supply, that is Mumbai. Then hotel expenditure paid to Serenia hotels. So basically hotel expenditure will come under service in relation to immovable property. For service in relation to immovable property, always location of immovable property will be taken. Where the hotel is located, the hotel is located in Mumbai, so Mumbai will be taken as the place of supply. Then D, Mumbai Bengaluru air ticket, again transportation of passengers, B2B, location of recipient Karnataka will be taken. Then so X registered in Bengaluru as well. Postpaid landline. See, landline will always be location of installation. Okay. So postpaid and all is just for confusion purpose. Landline always location of installation. Don't see anything. Then Mr. X Mumbai arranged for destination wedding of his son at Pushkar, Rajasthan. He booked a resort at Pushkar for accommodation of his guests and also performing marriage ceremony. Decoration was also provided by the resort. It will not come under organizing an event, because basically here, so organizing an event is part of renting of resort. So renting of resort is service in relation to immovable property. Decoration is ancillary. So you need to see it as naturally bundled. And the principal supply is what? Renting of resort. If the resort is not given on rent, the decoration will not be done. So therefore it will come under composite supply. The principal supply is renting of resort. So service in relation to immovable property. Service in relation to immovable property, what will be taken as the place of supply? Location of immovable property will be taken as the place of supply, that is Rajasthan. Then XYZ Limited of Delhi has entered into contract with ASL Training Institute of Mumbai for training and performance appraisal of its employees. The service were provided at Dehradun Training Center. So again, training and performance appraisal, if it is B2B, location of recipient. If it is B2G, location of performance, wherever the service is performed, that is Dehradun will be taken as place of supply. Mr. Ria of Pune booked online for Tiger Safari at Ranthambore National Park. We have entry ticket which is exempted. Tiger Safari entry ticket is exempted. So entry to zoo, wildlife sanctuary, tiger reserve and protected monuments. So that entry tickets, we have exempted. Museum, national park. So because of that reason it is exempted, but hiring of jeep is not exempted, it will be taxable. But these two are not naturally bundled. One taxable, one exempted means you need to apply mixed supply. Highest rate is what? Renting of jeep. So applying mixed supply, hiring of jeep, highest rate will be taken. For hiring of jeep, we don't have any specific provision for place of supply. So general provision, location of recipient will be taken as the place of supply. Then Mr. X has availed postpaid mobile services. Mobile postpaid. Mobile postpaid, we need to take billing address. Okay. Always billing address will be taken as place of supply. Mr. X residing in Delhi traveling with Indian Airlines is provided with movie on demand service. I told you. For transportation of goods, B2C, starting point of goods. For transportation of passengers, B2C, starting point of passenger. For service on board a conveyance, starting point of conveyance. Where the conveyance has started, Bangkok. So Bangkok will be taken as place of supply. A person from Mumbai goes to Kulu Manali and avails some services from ICICI Bank in Manali. What will be the place of supply? So general provisions, place of supply will be location of recipient. What is the location of recipient? Mumbai will be taken, because for banking services we don't have any specific provision, so we need to go by general provisions. Then Mr. X purchased prepaid mobile voucher. Prepaid mobile, we need to see whether it is through internet, yes, internet. So location of recipient in the records of supplier, general provisions. Jazz Fashions Limited, an Indian fashion designing company registered in Delhi, hosts a fashion show at Toronto, Canada. The firm receives service of ABC of Mumbai. So organizing an event. For organizing an event, again B2B, B2C, you need to check. B2B, location of recipient. B2C, location of the event. Okay. If the event is outside India, again location of recipient will be taken. So here it is B2B, registered in Delhi. That's why location of recipient. Mr. Ria of Raipur, unregistered person, hires the service of Messrs. XYZ, an event management company registered in Jaipur, for organizing a marriage ceremony of his daughter at Marriage Garden in Jaipur. Determine place of supply of service provided by XYZ Limited. What will be your answer in the case marriage takes place in Dubai? This is purely organizing an event. Just now we discussed B2B, location of recipient. But here it is B2C. So location of event, where the event is held Jaipur. What if the event is in Dubai? Then location of recipient will be taken as a place of supply. Government of India launched a project Make in India and appointed ABC Advertising Agency of Haryana for advertisement of the project all over the country. ABC agency advertises the project in all states of India. So advertisement service to government, each state where the advertisement is provided, and we need to apportion it based on rule 3. We have various bases of apportionment. You need to follow that. Okay. Then now we are moving on to value of supply. In value of supply, section 15. So first one, ABC Architects entered into contract with BTC Group of Hotels to design the architecture of one of its hotels at an agreed consideration of 20 lakhs. Out of the total consideration, it asked BTC Group of Hotels to pay 12 lakh 50 to its material supplier. See, generally transaction value will be taken as the value. What is the transaction value? Whatever is the contract price that is mentioned in the contract, that will be taken as a transaction value. So the transaction value under section 15(1) will be 20 lakhs. And here 12 lakh 50,000 rupees is incurred by recipient on behalf of supplier. Any expenditure incurred by recipient on behalf of supplier should be included in the value. So due to that reason, as per 15(2)(b), this 12 lakh 50,000 will be included in value, and the value of supply will be 32 lakh 50,000 will be taken. Then next, Mr. Ram provided repair and maintenance service of equipments belonging to A Limited, which are used in manufacture of oxygen. The repair and maintenance work was carried out at a factory of A Limited using electricity belonging to A Limited, and charges for service are fixed at 1 lakh. While value of electricity used is estimated 10,000 rupees. So definitely the 10,000 will not come, because this is purely expenditure incurred by recipient on his own account. So why that will be included in value? Such electricity charges are not expense incurred by supplier and charge it to recipient. Okay, even it is not incurred by recipient on behalf of supplier. So whatever contract price, that is 1 lakh only, will be taken as a transaction value. A supplier provides IT consultancy services of rupees 10 lakhs. The terms include an additional 1 lakh for software licensing. So that is expenditure incurred by supplier and charged to recipient. 15(2)(c). So incidental expenses, it will come into the value 1 lakh. Then even licensing 50,000. And the supplier offers a 10% discount. It's a pre-supply discount. Pre-supply discount is always allowed as reduction. Only post-supply discount only we have conditions. What is that? The terms should be agreed before the time of supply, and the recipient should reverse the ITC. But pre-supply discount, we don't have any such condition. Always it is allowed as reduction 1 lakh, 10% of 10 lakhs. Then next, the supplier also incurs 75,000 for special training session, which is paid by the recipient directly. So recipient incurs. This is recipient is incurring expenditure on behalf of supplier. Therefore, it should be included in the value as per 15(2)(c). So 11,25,000 will come. Then next one. Corel Print and Private Limited, a registered person under GST in the state of Jammu and Kashmir, has been engaged in business of offset printing and provided service to various book publishers. A publisher situated in state of Himachal Pradesh, so send the content. Okay, so publisher also sends the paper worth rupees 4 lakhs. So you gave me the paper, I am just doing the printing. So means carrying out process on goods belonging to others. It's like a job work. So in this case, only that 1,50,000 will be taken as the value of supply. Okay, then next, Z Limited is manufacturing lunch boxes and have entered into contract with Y Limited to make the lids for lunch boxes. As per the contract, Z Limited has to send the molds and dies. So as per the contract, when recipient has to send the molds and dies, and when recipient send the molds and dies, so definitely that will not be included in the value of the lids which is manufactured. Then input tax credit, we are moving on to first blocked credits. Mr. X, a chartered accountant, purchased a car for his use in business. Can he take ITC? No. Motor vehicles is block credit. Only 3 cases. That is, capacity does not exceed 13. Capacity exceed 13, always ITC available. That is not a block credit. Capacity does not exceed 13. But 3 exceptions are there. What are those 3 exceptions? Number 1, further supply. Number 2, used in the business of transportation of passengers. Number 3, imparting driving skills. Here it is not covered. So therefore it is not available. ITC not available. It's a blocked credit. Then Cool Cab Private Limited purchased 4 cars for use in the business of transportation of passengers. Car means capacity does not exceed 13 and it is used in the business of transportation of passengers. So ITC definitely available. And then MRF Limited purchased a bus 40 seater. 40 seater means what capacity? More than 13 passengers. First of all, it is not a block credit, so ITC available. Tagore School purchased a school bus 12 seater for transportation of students. Basically, transportation of students by a school is exempted. So because of that reason, as their outward supply is exempted, they cannot take ITC on their inward supply. Then Pizza Hut purchased 10 two-wheelers for food delivery. Is it used for transportation of passengers? No, it is for others. Due to that reason, ITC available. Ford Limited received the service of authorized service station with respect to trucks owned by it. Generally, trucks purchased by them, ITC available. As the trucks purchased by them is eligible for ITC. Even for the trucks, if they receive insurance service or authorized service center service or repair and maintenance service or renting service, that is also eligible for ITC. Okay, then car purchased by a manufacturing company for official use of its employees. So car, motor vehicle does not exceed 13, not covered under the exception, so ITC not available. Car purchased by a dealer for sale to customer, further supply. So as it is covered under the first exception, further supply, ITC available. Car purchased by a company engaged in renting out. Renting is also supply. See, supply does not mean sale, supply can be renting. I am into the business of renting of cars. If I buy the car, I can definitely take ITC. Cars purchased by a car driving school. Car driving school, imparting driving skills is in the exception, so ITC available. Trucks purchased by a company for transporting finished goods. Trucks, always other motor vehicles, ITC available. Aircraft purchased by RIL. Aircraft and vessel is blocked credit. And if it is coming under exception, only ITC available. But here it is not coming under the exception, so ITC not available. What are the 4 exceptions? Exception number 1, further supply same. So exception number 2, used in the business of transportation of passengers. Exception number 3, imparting driving skills. Exception number 4, used for transportation of goods. Then rent-a-cab service received by a company in BPO operations for transportation of its employees where it is mandated by government. Generally, rent-a-cab service is blocked credit. Why? Renting of motor vehicles is blocked credit. If the motor vehicle purchase is not eligible for ITC, even the renting of that motor vehicle is also not eligible for ITC. But we have an exception. What is that? If it is incurred by employer to employee under statutory obligation, then ITC is available. So statutory obligation by employer to employee. Mr. Rohit is engaged in providing beauty treatment services on a particular day with a view to cater the demand of large number of customers. He availed beauty treatment service. Generally, beauty treatment is block credit. But when the inward supply and outward supply is in the same category, then ITC is available. ABC Limited is engaged in supply of transport of passengers by air service with a view to provide its passengers the facility of food and beverages. It avails outdoor catering service from Hotel Taj, New Delhi. Resultantly, Hotel Taj raises a tax invoice on ABC Limited for supply of outdoor catering service for a stipulated consideration. Generally, outdoor catering is a block credit, but inward supply is part of outward supply. Part of outward supply, then ITC available. Outdoor catering service received by a factory where it is mandatory. Generally, catering service is block credit, but when it is incurred by employer to employer under statutory obligation, then ITC is available. So then we have some comprehensive questions related to ITC. A company availed ITC of 12,000 on goods purchased on credit, goods purchased on 12/10 and invoice also same date. However, the company failed to make payment to supplier within 180 days from the date of invoice. When the ITC needs to be reversed and what is the interest payable? So if the recipient is not making payment to supplier within 180 days from the date of invoice, so much of the ITC availed by the recipient needs to be reversed along with interest at the rate of 18% per annum from the date of utilization till the date of reversal. Here, what is the date of invoice? The date of invoice is 12/10. So plus 180 days. So plus 180 days is 9/4. And what is the 180 days expired on April? So what is the month of reversal? April means on 20th May we need to reverse. Okay. And what is the month of utilization? So they have utilized in December 2023. So month of utilization December 2023 means we need to count interest from 20th January 2024. So interest will be from 20th January 2024 to 20th May 2024. So for this 121 days, we need to compute interest at 18%. And in the numerator, February month is there. Due to that reason, in denominator, we need to take 366 days. Okay. Then next one. A manufacturing company claims ITC of 60,000 for inputs used to produce both taxable and exempted goods. At the end of the month, it is determined that exempted turnover is 20 lakhs and taxable turnover is 30 lakhs. Calculate the amount of ITC that needs to be availed and reversed. Simple. First, they will avail 60,000 and reversal based on exempted turnover. What is the exempted turnover? 20 divided by total 50. So 60,000 into 20 by 50, 24,000 will be reversed. So net eligible ITC will be 36,000. Then a business made an advance payment of 50,000 plus 18% GST for goods. The supplier will deliver the goods in the next month. Can the business claim ITC on the advance payment? No. So one of the conditions for availment of ITC is that the goods should have been received. The goods or service should have been received. So as they have not received this month, they cannot take ITC this month. A company purchased a car for its CEO costing 10 lakhs plus 28% GST. The car is used exclusively for office purpose. Is a company eligible to claim ITC on car purchase? No. Car is a motor vehicle. Capacity does not exceed 13 and it is not covered under exceptions here. So ITC not available. A manufacturer purchased machinery for 5 lakh plus 18% GST. The machinery will be used exclusively for manufacturing taxable goods. Calculate the ITC available for the machinery if the depreciation is computed on 5,90,000 for the purpose of Income Tax Act. See, while calculating the depreciation, they are adding the tax components of 5 lakh plus tax component, which means they cannot take ITC. Then a company paid 2 lakh plus 18% GST for club membership fees for its independent directors. It is mandatory for the company to take membership for its directors. Is the company eligible to claim ITC? As it is taken under a statutory obligation, membership of a club, health and fitness center, if it is under a statutory obligation, then ITC is available. Then a business claimed ITC on the purchase of office supplies amounting to 20,000 plus 18%. Later, 10% of the supplies were found to be used for personal purpose. If the purchased goods are used for personal purpose, proportionate to that, you cannot take ITC. So what is the ITC availed? 20,000 into 18%, 3,600. Out of the 10% is used for personal purpose. Now you reduce it. So 360 you reduce. So the net eligible ITC will be 3,240. Then a sole proprietorship is being converted to private limited company. The proprietorship has an unutilized ITC of 1 lakh in its electronic credit ledger. Can the ITC be transferred to the private limited company? What is the form required in that case? So whenever there is a transfer of business with specific provision for transfer of liabilities, so the unutilized ITC can be transferred from the transferor to the transferee. Okay, and what is the form that is required? ITC2. So ITC2, and that should be duly certified by practicing CR CMA. A company sells a machine for 1,50,000 plus 18% GST on 18/4/2024. The machine was purchased on 23/7 for 5 lakh plus 18%. The company claimed ITC. Now they are selling. So whenever they have purchased a capital goods on which ITC availed, on disposal of the capital goods, the GST payable will be ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of disposal. So first we need to see what is the ITC availed. 5 lakh into 18%, 90,000 minus 5% for every quarter or part thereof. 5% into how many quarters? When is it purchased? 18/4/2000 and 23/7. 23/7 means what? July. So July, August, September, October, November, December. 2 quarters in 2021. Then in 2022, 2023. So like 4 plus 4, 8, 9, 10. Again in 2024 up to April, 2 quarters, so 12 quarters. So 90,000 minus 5% into 12 quarters, 36,000, or 1,50,000 into 18%, whichever is higher. So which is higher? That like 36,000 is only higher, that will be taken. Okay, be careful. This is most tested question. Then a pharmaceutical company claims ITC on purchase of medicines worth rupees 10 lakh plus 12% GST. Later some medicines worth rupees 2 lakhs expired and are disposed of. So whenever the goods are disposed of, purchase goods are disposed of or written off, etc., we need to reverse the ITC. So whichever month it is written off, that month we need to reverse the ITC. So 2 lakhs into 12%, 24,000. Then for the month of July 2024, ITC reflected in 2B is 3 lakhs and blocked ITC is 50,000. So first we will take matched ITC, that is ITC as per 3B 3 lakhs, and this blocked ITC reflected in 2B means in this 3 lakhs this 50,000 is there, but we should not take that. So minus blocked ITC 50,000. ITC with respect to non-business 25,000 we should not take. Moreover, it is not coming in 2B. We should not take, and it is not coming in 2B, so just ignore it. Okay. Then GST paid under RCM is 10,000. We can take, but it is already there in 2B means we have taken in 3 lakhs, so that again you ignore it. And ITC reversed in earlier month, eligible to be re-availed in 2024, not reflected in 2B. We can take it, and it's not there in 2B, so we can add. So add that 30,000. So this is the ITC availed in GSTR 3B. So this kind of adjustment we need to make. Okay. So mostly again in that first question this will be tested. A taxpayer has an output tax liability of 50,000, CGST 50, SGST, and so 50,000 CGST, 50,000 SGST, and 1 lakh IGST. That is the liability. So 50, 50, and 1 lakh. And ITC 40,000, 40,000, and 10,000. So first IGST credit we will fully utilize for IGST, then CGST, SGST. So this is the net GST payable. Then a taxpayer has claimed excess ITC of 2,50,000 in their GSTR 3B filing for the month of April. Out of such 2,50,000, he utilized 1 lakh in GSTR 3B of June. The excess ITC was reversed in the return file for the month of July. Calculate the interest payable for the excess ITC availed and reversed. First, what is the ITC? Availed and reversed. Availed and reversed is only 1 lakh. Even though he availed 1 lakh but only utilized this one, even though he availed 2,50,000, but utilized is only 1 lakh now. So therefore, we need to compute interest only on 1 lakh. What is the date of utilization? The date of utilization is 27. How you know that the date of utilization is 27? June month. June month means 20th July. And what month they reversed? Reversed in July means 20th August. For this 31 days, we need to compute interest. A taxpayer has a turnover of 75 lakhs for September 2024 and a GST liability of 6 lakhs. Okay. And we have Rule 86B. What does Rule 86B says? Whenever the taxable turnover in a month exceeds 50 lakhs, so 1% of the gross liability, they should pay through electronic cash ledger, even though there is sufficient balance in the electronic credit ledger. So here 75 lakhs. GST liability of 6 lakhs, the taxpayer has ITC of 7 lakhs, so more ITC is there for the month of September. Now we need to check for September whether 86B is applicable or not. We have one exception which says that cumulatively, if from April to September already they paid more than 1% through cash ledger, for September month they don't have to fulfill. So cumulatively from April to September, how much they already paid through cash ledger? 40,000 out of the total liability of 48 lakhs. So 40,000 divided by 48 lakhs up to August, including September, it will be 6 lakhs. So 48 plus 6, 54. 40,000 divided by 54 lakhs into 100.74, which is less than or equals to 1%. So Rule 86B is applicable for September. So what we need to do for September? This 6 lakhs we will pay, but ITC fully we will not use. Only 99% of 6 lakhs we will use. 99% of 6 lakhs is what? 5 lakh 94 only. Then the 6,000 we have to pay. So the excess credit will be there now. This 7 lakhs, 1 lakh plus that 6,000 we have not utilized. So 7 lakhs minus 5 lakh 94 only we utilized. So this 1 lakh 6,000 will be carried forward. Next. A taxpayer with a turnover of 55 lakhs has filed a refund claim for ITC on account of exports in the previous month. The GST liability for the current month is 4 lakh 50 and ITC of 4 lakh 50. Does Rule 86B apply? So we have another exception for Rule 86B, which says that if they have already claimed a refund of ITC more than 1 lakh, so then in that case, Rule 86B is not applicable. But here they have not given how much refund they have claimed. Only if refund of ITC greater than 1 lakh during previous year, then Rule 86B is not applicable. In the present case, Rule 86B is applicable. Why it is applicable? Because that 1 lakh point is not given. So therefore, out of 4 lakh 40, 1% we have to pay through cash ledger, that is 4,400. ABC Limited purchased a machinery worth rupees 10 lakhs in January 2024 and claimed ITC of 1 lakh 80. In April 2024, the company opted to switch to the composition scheme, normal scheme to composition scheme, means they need to reverse the ITC. How much ITC they need to reverse on capital goods? First, total ITC on capital goods divided by the life of capital goods will be taken as 60 months and we need to see the balance life. So 1,80,000 divided by 60. How many months they have used? They purchased in January and April they are going. So means Jan, Feb, March, only 3 months they have used. So balance life will be 57. So for 57 months, we need to reverse the ITC pertaining to capital goods. Then next we have composition scheme. In composition scheme, so see the first question, turnover of a person during the previous year, Tamil Nadu 60 lakhs, Karnataka 30 lakhs and Kerala 40 lakhs. During the current year, can that person opt for composition scheme under 10.1? So first we need to see the aggregate turnover. While computing aggregate turnover, we need to check on all India basis. So 60, 30 and 40, that will be 130 lakhs. And Tamil Nadu, Karnataka, Kerala, none of these is in MMT and USAM. Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya, then it will be 75 lakhs. So here it is not there. Therefore, the applicable limit will be 150 lakhs. As the aggregate turnover during previous year does not exceed 150 lakhs, current year they can opt for composition scheme. Then turnover of a person during previous year, Tamil Nadu 60, Karnataka 30 and Kerala 40 lakhs. What is the limit up to which service can be provided during the current year if they have opted for composition scheme under 10.1? So whenever we determine the limit up to which service is provided, we should not see aggregate turnover, we need to see turnover. Turnover should be determined state-wise. So Tamil Nadu 60 lakhs into 10%, 6 lakhs or 5 lakhs, whichever is higher, 6 lakhs. 30 lakhs into 10%, 3 lakhs or 5 lakhs, whichever is higher, 5 lakhs. 40 lakhs into 10%, 4 lakhs or 5 lakhs, whichever is higher, 5 lakhs. So that is the limit up to which services can be provided. Then turnover of a person during the previous year, Kerala 60 lakhs, Nagaland 20 lakhs. During the current year, can that person opt for composition scheme under 10(1)? So basically, one of the state is in MMTN USAM. Therefore, the applicable limit will be 75 lakhs. So 60 plus 20, 80, which is exceeding 75 lakhs. So current year, they cannot opt for composition scheme. Remember, in composition scheme, all in, all out. That is, if all the registrations of a person is in composition scheme, then they can go for composition scheme. Otherwise, all the registrations will be into normal scheme, but mix and match is not possible. Okay. Then aggregate turnover of a person in Tamil Nadu during the previous year is 120 lakhs, and during the current year, such person opted for composition scheme, and their turnover is as follows: taxable goods 40, exempted goods 20, taxable service 8 lakhs, interest income 8 lakhs. What is the limit up to which service can be provided during the current year? They can provide service up to 10% of turnover during previous year. Count the turnover during previous year: 40 lakhs. Already it is given 120. So 120 into 10%, 12 lakhs, or 5 lakhs, whichever is higher, 12 lakhs. In the above case 4, whether service provided during the current year is within the limit? Yes, because we should not see interest. Interest income should not be taken. Other service 8 lakhs. 8 lakhs is within 12 lakhs. So therefore, current year service is within the limit. Then, in the above case 4, what is the GST payable under composition scheme if such person is a manufacturer? Manufacturer means they need to pay GST on total turnover. Okay. So therefore, taxable turnover 40, exempted 20, service is 8. Interest income will not come. So therefore, 68. Okay, 68 into 1%. So 68,000. CGST 34, SGST 34. In the above case 4, what is the GST payable under composition scheme under 10(1) during current year if such person is a trader? If such person is a trader, they will pay only on taxable turnover. So what is a taxable turnover? Only 40 and 8. So 48 lakhs into 1%, 48,000. CGST 24 and SGST 24,000. Then a person commence business in Kerala and their pre-registration turnover is 40 lakhs and post-registration turnover is 120 lakhs. So can the person opt for composition scheme? While determining the aggregate turnover, even pre-registration turnover should be taken. So 120 plus 40, that will be 160 lakhs, but the applicable limit is only 150 lakhs, which exceeds. Okay. So due to that reason, they cannot opt for composition scheme. A person registered in Tamil Nadu engaged in making following supplies during the previous year: supply of goods 85 lakhs, interest income 15 lakhs, supply of service 60 lakhs. Can such person opt for composition scheme under 10(1) during the current year? If yes, what is the limit up to which services can be provided? See, basically, so what is the aggregate turnover during previous year? 85 lakhs, and interest income don't take. Service 60 lakhs, 145 lakhs, and they are in Tamil Nadu. So applicable threshold limit is 150. So they can opt for composition scheme. And what is the limit up to which service can be provided? 14.5 lakhs. So 14.5 lakhs is the limit. During the current year, a person commenced business in Kerala as a trader. Aggregate turnover for the year is 180 lakhs and applicable threshold limit for registration is 40 lakhs. And applicable rate of GST is 12%. Compute GST payable if composition scheme is opted. What is the overall turnover? 180 lakhs. In that, up to what limit they will be in composition scheme? 150. And remaining 30 will be normal scheme. So that will be normal rate. In this 150 also, there is a pre-registration turnover we should reduce. So what is the pre-registration turnover? 40. So only on 1 lakhs, the rate of 1% will be applicable. Okay. Then, what will be your answer in the above question if their aggregate turnover for the year is 130 and other information remains the same? What is the overall turnover? 130. Still, it is in composition scheme. What is the pre-registration turnover? Always pre-registration turnover you reduce while doing the computation of GST liability under composition scheme. So, minus 40 lakhs. So, remaining 90, on that only GST payable. Then, a person being a trader opted for composition scheme during the current year and the transaction are as follows. For the second quarter, advances received in the first quarter 20 lakhs. So basically GST payable on advances by a person opting for composition scheme because GST applicable on goods advances for composition scheme and specified actionable claim. So due to that reason, first we need to see what is the bill of supply for the second quarter. Bill of supply for the second quarter 60 lakhs. And from that we need to reduce the advances in quarter 1 for which supplies are made in quarter 2 because already on that advances GST would have been paid. So what is the advances in quarter 1? So advances received in first quarter 20 lakhs, so take out. And advance received in second quarter for which supplies are made in third quarter you need to add. So 30 lakhs. So therefore 70 lakhs GST will be payable. Then a person engaged in sale of beauty products in their shop in Chennai, Tamil Nadu and is engaged in beauty parlor service in Coimbatore, Tamil Nadu. This person has obtained 2 separate registrations and they want to go for 10(1) in one place and 10(2) in another place. Not possible. See, both the registrations either 10(1) or 10(2) but not both. Okay. So that all in all out is for 10(1), 10(2) also. Then Mrs. F, a taxpayer under composition scheme, had a composition tax liability of 50,000 for the quarter ending December 2023. She failed to pay the tax on time and made the payment on 31st January. Calculate the interest on the late payment if the interest rate is 18%. What is the due date of payment of composition tax liability? 18th of the month following every quarter. So what is the quarter here? The quarter ending December 2023. So December 2023 means 18th January will be taken as the due date. So due date of payment of GST is 18 January. Actual date of payment will be 31st January. So the number of days delay will be 13 days. For this 13 days, interest will be payable. Then Mr. I, a manufacturer under composition scheme under 10.1, having aggregate turnover of 80 lakhs during current year, receives legal services worth 5 lakhs from an advocate. Calculate the total GST liability of Mr. I if the applicable GST rate is 18% on legal services. So what will be taken as the GST liability? First, being under composition scheme, they need to pay GST at the rate of 1%, but RCM they need to pay the regular rate. So composition tax liability is 80 lakhs into 1%, 80,000. But RCM liability will be 5 lakhs into 18%, 90,000. So the total tax liability comes to 1,70,000. Okay. Then next one, you see this. Discuss whether e-invoice or dynamic QR code is applicable based on the information given. So this question I have included in MAY'25. Same question I have included in MAY'25. You can see that same, literally same question. It is there in MAY'25. Okay, so you can see that I have given over there. Next, so we have this registration and other small topics. So these small topics you can just go through quickly at your end. I will share this. I will write the answers and I will share with you. As I told you, for some 2 hours we spend on revision of this. So this 2 hours effectively you would have got some kind of kick into the subject. Okay, and so many students have already left. Maybe you guys are getting sleep now. Don't waste time. So my humble request to you is that you just wash your face, go wash your face, drink some water and complete the amendments video. Please, you complete the amendments video. Don't postpone. Hardly it is 1.5 hours. You watch in 1.5 speed and complete that fully. Okay, so that is my humble request to you. So please complete that and then go for sleep. Yes, it will be difficult. Have some coffee, tea, or wash your face and do that. Okay, and these questions and all, you just quickly tomorrow you revise it. I will share the answers, including answers. I will share this PDF in the Telegram group. You can just do it. And one more request, please subscribe to this channel so that whatever extra things that I am doing, you will be able to receive. Okay, and prepare well. Don't worry, I am there tomorrow also for you. Whatever doubts, you just come into the Telegram group, and THARUN'S GST is the Telegram group. Whatever doubts you have, you just join the Telegram group and you post your queries. I am fully active tomorrow for you. Whatever doubts that you have, I will be ensuring that I am covering it for you. But stick on to the income tax. Tomorrow evening you take GST. At the time of GST, I am there. Even day after tomorrow also. Just stick on to this. Definitely you will be able to do wonders. Okay. So PDF I cannot share, dear. PDF I cannot share. So kindly understand my situation. So book PDF and all I cannot share. That's why long back itself, that too at a very reasonable rate I have given. So try to understand that. And all the very best. Do well, guys. You will rock. Okay. And see, the last minute effort is very, 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 very important. How much ever you are going to put your energy in the last minute, that will give you very good success. Okay. So just go, wash your face, complete amendments and sleep. That's my request to you. No, warning to you. Okay. So do that. Thank you. Thank you. Take care. And I will be available in Telegram. Whatever doubts you have, don't hesitate. I will do the best. Okay. And what is the right order to revise? Already I told you today. I was telling, maybe you would have joined. So this, first you take exemptions, RCM. Tomorrow you go for, now you do amendments. Tomorrow you take income tax. Already this category ABC topics I have given you. And GST, when it comes to GST evening, you start with exemptions, then RCM, then input tax credit, then place of supply, then value of supply, and then remaining topics. Okay, this is the order in which you need to read. Okay, done. Thank you. Take care. And don't forget to complete amendments and go to bed. Thank you.